Hello, what's up? How is everyone doing? Welcome to this revision session where we are going to revise Essay 510. So, talking about Essay 500 series, we have already recorded the revision of Essay 500, 501, 505. Now, we are going to revise 510. In this revision, we are going to cover all the concepts along with the questions of ICA study material, RTP, MTP, and past exams. Sir, where will we find these concept notes? These concept notes are available on the Telegram channel. Clear CA with Shubham Keswani. Link is in the description. So you can go to the file section and download them. So before I begin with this revision, make sure as a good CA student, you are liking this video so that it can reach more students from southern parts of India who want such English revision videos. If you are new to this channel, do subscribe the channel. So talking about Essay 510, sir, what does it say? First of all, it is not one, it is I. I for initial audit engagement. O for opening balances. Come on, initial audit engagement, focus on opening balances. First of all, what is the initial audit engagement? Sir, it means that the prior period financial statements, either they were not audited or they were audited by some predecessor auditor, that means some another auditor. So can I say in simplistic terms, prior period financial statements were not audited by the current auditor. They were not audited by current auditor. Either they were not audited or they were audited by predecessor auditor. Second point, sir, what do you mean by opening balances? So let's say your current year is 31st March 25. So in the balance sheet, there will also be figures of 31st March 24. These are called opening balances. Acha, does opening balance only means amounts? No. It also means disclosures present at the beginning of financial year. So in case there is a legal case pending since 2021, which is continuing from the previous year, any disclosure regarding that legal case will also be considered to be a opening balance. Are these basics clear? Yes, sir. Now, sir, what is the objective of auditor in relation to the opening balances? So there are two objectives. We need sufficient and appropriate evidence that whether the opening balances have any material misstatement. How do you write it? So you say we need evidence that opening balances contain any misstatement that materially affect the current year financial statement. Got it, sir. Second thing you need to see, apart from the opening balances, there is one more thing that comes in the current year, that is accounting policy. That gets carried forward from the last year, that is accounting policy. So the first thing that you need to see about accounting policy is that the appropriate accounting policies are consistently applied, or if there are any changes, they are properly APD. APD means accounted, presented and disclosed as per applicable FRF. So if you know what is applicable FRF, if you are making the accounts as per accounting standard, it is AS5. If you are using Ind AS, it is Ind AS 8. So Ind AS 8 says whenever there is a change in accounting policy, you need to give a retrospective effect. You need to give a retrospective effect of accounting, and when you are presenting the financial statement, you need to prepare a third balance sheet. You need to prepare a third balance sheet. So such accounting and presentation should be done as per applicable FRF. So once more, let's revise. We need evidence that opening balance contain any misstatement that materially affect the current year financial statement. Second thing, we need to see whether the appropriate accounting policies are consistently applied. If they are not, if there are any changes, those changes are properly APD. APD means accounted, presented and disclosed as per applicable FRF. Now the question comes, what procedure we need to perform? What procedure we need to perform to get this sufficient and appropriate evidence? So this is what we are going to discuss now, and it is the most important topic of this standard. So first things, two things that you need to determine. These two things are from the objective only. First thing that you need to determine is, you want to test the opening balance? Yes, sir. Can I say this year's opening balance is last year closing balance? This year opening balance is last year closing balance? Yes, sir. So all you got to do is just see that the prior period closing balances have been correctly brought forward to the current period. Now, sir, if in the prior period there were some misstatements, there were some issues, those things need to be corrected in the current year. Sir, how are they corrected? They are adjusted as a prior period item. You study in India's 8, whenever there are misstatement in the previous year, they are corrected in the current year P&L as a prior period item. So these are the things you need to see. Prior period closing balances have been correctly brought forward to the current period, or if there are any adjustments, they are disclosed as a prior period item in the current year P&L. Second point again is same as we talked about in objective, that appropriate accounting policies have been consistently followed, and if there are any changes, they are properly APD, accounted, presented and disclosed. How do I check both of these things? Sir, by performing one or more of the following procedure. What are these procedure? First of all, if you want to know the closing balances, ठीक है, how can you know the closing balances, sir? We can read the audited financial statements, we can read the last year audited financial statement, and this is the same thing written in the standard. Where the prior period financial statements are audited, you can do perusing of the copies of audited financial statement. Sir, what is perusing? Perusing means detailed reading of the copies of audited financial statements. Okay, sir. What are the other two procedures? CAP and SAP. CAP means current year audit procedure. SAP means specific audit procedure. Let's understand with an example. For example, if I am testing the debtors in the current year, do I test the credit sales in the year? Yes, sir. Do I test the recoveries? Yes. Bad debts? Yes. Closing balance? Yes. Now tell me, if I talk about the recoveries, some recoveries will be from the opening balance? Yes, sir. If I am testing the bad debts, some bad debts will be from the opening balance? Yes, sir. And if I am testing the closing balance, some closing balance will be from the opening balance? Yes, sir. So when I am testing the recoveries, bad debts and closing balance, can I say I am indirectly testing the opening balance? Arey Baba, these recoveries are from opening balance? Yes, sir. Bad debts will be from some opening balance? Yes, sir. Remaining balance will also be from some opening balance? Yes. When I am testing these things in the audit year, current audit year, so can I say indirectly I am also testing the opening balance? Yes. This is called current year audit procedure, or you can say CAP. Okay, sir. Second type of procedure, SAP. What is SAP? Specific audit procedure. So generally in audit, when I want to test the bank balance, I take the confirmation for the year end. Yes, sir. Now if I want to check the opening balance, can I specifically take the confirmation for opening balance? Yes, sir. So when you are specifically taking the confirmation for opening balance, this is what? Specific audit procedure. Come on, specific audit procedure. So in addition to seeing the audited financial statements of the prior period, you can do CAP and SAP. CAP means current year audit procedure, which can give you information about the opening balance, and SAP means specific audit procedure. So these are the three procedures you can do. Now, sir, some amazing thing is coming. When I am performing these procedures, I have a doubt. With the evidence that I have got, I have a doubt that opening balance could be, I'm not sure, they could be materially misstated. So, sir, when you have a doubt and you want to know the reality, you need to do more testing. You need to perform additional audit procedure. Now, after additional audit procedure, if you conclude that yes, misstatement exists, please communicate to management and TCWG as per SA 450. SA 450 says, now in this case, when you have found a misstatement, communicate to management and TCWG and ask them to correct it. So this is what I have just discussed with you. Let's revise whatever we have covered till now from the book. So we started with SA 510, I for initial audit engagement, O for opening balances. First of all, what is the initial audit engagement? Sir, it is an engagement in which the prior period financial statements not audited or they were audited by some predecessor auditor. Opening balances means the balances at the beginning of the period, but they also include the disclosures which are related to the beginning of period like contingent liabilities and commitments. Now, sir, what is the objective? First of all, see whether the opening balances contain any misstatement that materially affect current year financial statement. Second thing which gets carried forward, accounting policy. Appropriate accounting policies have been consistently followed, or if there are any changes, they are properly APD, accounted, presented, and disclosed as per applicable FRF. Now comes the best part, audit procedure. Basic procedure is read the recent financial statements and their audit report. Now elaborate this answer. We need sufficient and appropriate evidence whether the opening balance contain any material misstatement by seeing that the prior period closing balances have been correctly brought forward as opening balance. If there are any adjustments, they are properly disclosed as prior period item in the current year P&L. Second thing, appropriate accounting policy. How do you check both these things? By performing one or more of the following procedure. If the prior period financial statements are audited, perusing the copies of audited financial statement. What were the next two procedures? CAP and SAP. CAP means current year audit procedures to get evidence of opening balances. SAP means specific audit procedure to get evidence of opening balances. Now add SK Masala. SK Masala. Sir, what is SK Masala? If you get the evidence that opening balances contain misstatement that can materially affect current year financial statement, that could means you are not sure, you have a doubt. So to get that surety, you need to perform additional procedures. Now if you conclude that misstatement exists, communicate to management and TCWG. Is the flow of the answer clear? Yes or no? Yes, sir. I hope the flow is clear to all of you. Now, sir, let's discuss some examples of current year audit procedure. So, as I told you, if I want to test the debtors, opening debtors, I can check the recoveries during the year, collections during the year. So, this is what is written here. For checking the opening debtor, you can check the collections during the period. On the contrary, if you want to check the opening creditor, you can check the payments made during the year. Got it. What about inventories? How can I test the opening inventories? It is very easy. If you want to check the opening inventory balance, multiply the quantity with the value. Okay. Multiply the quantity with the value. Now, sir, how can I test the quantity? Very easy. Can I say I can attend the physical inventory count at the closing of the period? Yes, sir. Can I attend the physical inventory count at the opening of the period? No. There is no time travel machine. There is no time travel machine where I can go to the opening balance and test it. So what I will do, I will attend the inventory count at the close of the period and reconcile the closing inventory with the opening inventory. I will attend the inventory count at the closing of the period and reconcile it with the opening inventory. This is how I test the quantity. So the first thing is observe the inventory count, current inventory count, and reconcile with the opening inventory. You understand the reconciliation? Yes. Closing minus addition during the year plus deletions during the year. And then you come to the opening inventory balance. Now, sir, what about valuation? So valuation is something you already know, cost or NRV, whichever is lower. So perform the procedure on valuation of inventory. So for valuation, you also need to know the gross profit, because once you reduce the gross profit from the sales price, once you reduce the gross profit from the sales price, then only you get to know the cost. And one more thing, when you are testing this inventory, you should be sure that the inventory balance is on the opening day. Opening means 31st March 24. So if you want to be sure that this inventory balance is on 31st March 24, you need to perform cutoff procedure, that it relates to that date only. So you need to perform cutoff procedure. So these are the 3 points you need to consider. For the quantity, attend the inventory count in the current period, reconcile to the opening balance. For valuation, perform procedures on valuation, perform procedures on gross profit. Acha, to come to the cost value, you cut the gross profit from the sales price, you cut the gross profit. So from cut, remember cutoff procedure. From the cut, remember cutoff procedure. These are the 3 procedure. Now, sir, we are just left with 2 more topics and this standard is done, done. Then we will move on to the questions. What are the next 2 topics? Let's play a game. See, if I have the evidence that accounting policies are not consistently applied, that means there are changes. But these changes are not properly accounted, presented, or disclosed as per applicable FRF. So, Baba, what opinions are possible? Because you have evidence, only two opinions are possible, adverse and qualified. Disclaimer is not possible. Second case, if I talk about the opening balance, there is a material misstatement. I have evidence about it. So if you have the evidence that there is a material misstatement, only two opinions are possible. Similarly, adverse and qualified. Disclaimer is not possible. But if you don't have evidence about a material opening balance, then only two opinions are possible, disclaimer and qualified. Adverse is not possible in this case. So with this, your opinion wala part is also complete. Acha, the last line says basically this thing. In case the predecessor audit report, in case if the predecessor audit report, it has a modified opinion. And sir, that material misstatement because of which the predecessor auditor gave a modified opinion, that is still not corrected. That is still not rectified, and that material misstatement is still relevant. Okay, that is still material to the financial statement. Then in this case, you again need to modify your opinion. So if management has still not rectified the material misstatement because of which predecessor auditor gave a modified opinion, so as a current auditor, because that material misstatement is not rectified, you still need to give a modified opinion in the current period audit report. Now coming to the questions, we have just three questions, one case study based question, two direct questions. Let's revise them quickly. Take 2 sips of water. Awesome. First of all, talking about question number 1, it is a very easy question. So what does this question says? This question says that you are CA Jill. You have recently qualified as a CA and you got your first audit assignment. First audit assignment means you are doing the audit of this company for the first time. Now, sir, you have audited all the items, but there is one balance sheet item, that is debtors. That is trade receivable, that you have not audited. Why you have not audited? Because management has told you this debtors balance has been carried forward from the previous year. Same balance was there last year, same balance is there in the current year. Okay? So you have not taken any confirmation for the debtors of rupees 190 lakhs. Because management says this is the same balance continuing from the last year. There is no receipt, there is no further credit during the year. So in your audit program, you excluded the audit of trade receivables. Now you have an understanding that it was audited in the last year by the predecessor auditor. Comment. Now, sir, how do we deal with such case study based question? So first of all, there are various hints in the question to know that it is a question of SA 510. It is your first audit assignment. That means initial audit engagement. Last year financials were audited by predecessor auditor. Again a hint that it is a initial audit engagement. So whenever it is an initial audit engagement, do you need to take evidence about the opening balances? Answer is yes. So first of all, you will start your answer with the objective. Objective means getting the evidence. Objective is to obtain sufficient and appropriate evidence that opening balance contain any misstatement that materially affect the current year financial statement. Appropriate accounting policies have been consistently applied, or if there are any changes, they are properly accounted, presented and disclosed as per applicable FRF. Then you talk about your audit procedures to achieve the objective. What were the procedures for testing the debtor? Sir, perusing the copies of audited financial statements. Perusing the copies of audited financial statement. And one more procedure I talked about debtors, that you can check the collections during the year. So you can check the collections during the year to test the assertions. What are the assertions? ERCV, existence, right, completeness and valuation. One more thing you need to write in this answer is management gave you an affirmation. Management told you that there is no receipt during the year. For this, you should take proper written representation. Rather than just oral understanding, you should take written representation. So as per SA 580, management should provide written representation. And remember, it is not sufficient and appropriate evidence. It is a necessary evidence, but not sufficient and appropriate evidence. Then you write the facts of the case in 1 or 2 lines. And lastly, you conclude. Whatever you wrote in the answer, you conclude. First thing, you should not exclude the audit of debtors from your audit program. You should do proper audit. Second thing, you should take written representation. And the third thing, which most of the students miss, I don't want you to miss, is giving a reference of professional ethics. This is the only question of standards which give a reference of professional ethics. So very important, please mark it. Clause 7, part 1, second schedule. Sir, what does this clause says? A CA in practice shall be deemed to be guilty of professional misconduct if he fails to exercise due diligence or he is grossly negligent in the conduct of duties. So this thing also becomes a part of your answer. You're getting the point or not? Yes, sir. So if I talk about a quick summary, you talk about the objective. After objective, you talk about the procedure, perusing the audited financial statement, current audit procedure, checking the recoveries, then talk about written representation, and lastly, you conclude that it is also a professional misconduct, clause 7, part 1 of the second schedule. You like this question or not? Yes. Still, if you have not liked this video, it is very bad. Quickly like it. Second and third questions are direct. Second question is a direct question. Material inventories are present in the opening balance. What is your responsibility? So for inventory, 3 procedures I taught you. These 3 procedures will become a part of this answer. Clear? So with this, our revision of essay 510 is done. I think there is one more question which was asked in a recent MTP. Let's do that also. It's a direct question, so no need to worry about it. MTP September 25. See what it says. Read the first part. Mention the audit procedure to get evidence about the opening balance. Can I say it is a direct question? Yes, sir. Check that the closing balances have been correctly brought forward. If there are any adjustments, disclose at prior period items. Check appropriate accounting policies are followed, right? Then the 3 procedures. Perusing the copies of audited financial statement, cap and SAP, current audit procedure, specific audit procedure, very simple. Then you are talk about the second part. If you don't get evidence or if you get evidence about the material misstatement, what you do? Sir, you already taught us. If we have the evidence, give a adverse or qualified opinion. If we don't have a evidence, give a disclaimer or qualified opinion. So this is the same thing we study in SA 705, and this is what you need to write in your answer. And this is what ICI is also written. If you don't have evidence, give qualified or disclaimer. If you have evidence, give qualified or adverse. Clear, boss? Clear, sir. So with this, the revision of SA 510 done. All concepts done. All learning techniques, cap and SAP done. And all the questions of RTP, MTP and past exams done. See, because this standard is tested in the recent RTP, MTPs, it becomes very important for your exams. Please do it properly, and that's all I want to say. If you like this video, do give it a like. Do share your feedback in the comments because your appreciation is my motivation. Till the next session, keep studying with happiness because then only we progress. Keep going.